So I've made a couple of these in all of them so far. I believe I said like this is my swing trading account. This isn't my normal style. I'm trying to learn this style simply because I see it as being a little bit less work and a little bit more profit. You're catching bigger moves and you're making less decisions. Um, so by nature of that, it's just a little easier. Also, I think what makes it easier is the lesser stress that comes because when you're scalping a lot, when you're in and out of positions quick, it's a lot more emotional. Like obviously, as the more you trade, the longer you trade, the less the emotions play into it. But when you're fighting for a few handles worth of profit as opposed to trading off the daily chart or the hourly chart, and you're not always fighting next to your entry, then things are a little more calm. So I'll kind of delve into what I normally do, and this is the method that I use that makes me consistently profitable. Um, so yeah, in simple, what I do to start off is I will trade in play sectors, of course. Um, right now I'm trading on an EV name. Now, ideally, what I wanted to do was trade Lucid today. I was going to let it. So pre-market, it was down here. You can see I already had all these levels drawn out, all these different lines, like this purple one, the yellow one, the white one. Those were all supported levels from previous trading days, or actually the purple one was the pre-market kind of high level. And as it approached that, at least over this, but as it approached that is when I was going to get short. But if you can see up here in the right corner, up here, it says HTB, which means hard to borrow. So on Thinkorswim, which is the primary broker I use, I do also use Interactive Brokers, which supposedly has a bit better short pool. I should have maybe checked with them. I haven't opened Trader Workstation, their platform, in quite a while. But that's besides the point. So when I noticed this was hard to borrow, I went to one of its peers, which is kind of a peer, but not really, because Neo is in the same market as far as like its product goes, but it's a Chinese stock. I don't think they have any market share in like any dealerships in the U.S. as far as I know. So first thing I do when I look at something like this and I start drawing out my, I'll draw out my levels based on the previous several days of trading, week or so, and then I'll draw some out maybe even on the daily, depending on how close or far away we are from those points. And then next is we pull up our handy dandy FinViz, of course. And what I look for here is basically this column over here mostly, which tells me, like, I do take some of this other stuff into account, not really any of this crap in the middle, but what I really want to know is right here, the ATR, which stands for average true range. Some people will call it ADR, average daily range, ATR, ADR, same thing. So this one we have 203. Now this is another reason I was leaning towards Lucid, because the ATR on Lucid is like 3.4, just shy of 3.4, and higher ATR means more volatility means more profit. So you generally want to be in the higher ATR name, especially if they're both at like the same price point and other factors are rather similar. So once I'm done looking at that, which I do all that stuff pre-market, what I do is I wait for my proper entry. Sometimes the entry doesn't come, and in that case, you don't take the trade. It's Friday. There's generally quite a bit less volume in the market on Friday, just because people are going to start the weekend, So I watch this out of the open, and I do these entries based on the 1 minute chart. Now, what I look for is a couple candles similar to this one here, because that's telling me You can see like the meat of the candle is pretty thin. This is generally what's referred to as like a doji, where you have a long wick on both sides of the candle and the body of the candle's very small. And that's telling me buying and selling is pretty darn equal in that spot. So once again, I waited just a little further because the key to this is you never jump in on these beefy candles. You know, this candle right here, this one right here is kind of big. I would never buy those candles, not ever. I would never establish a position in those candles. Also, the first 15 minutes or so of the trading day is generally the most volatile, outside of like a midday news release of some kind on a certain name. So I tend to try not to take positions within the first several candles. So that being said, we see it hit a new high here. It broke its pre-market high, not by a lot. The other one was 43.27, and we hit 43.55. So then I waited for this next candle, which ended red. So when you have a red candle, you know, I'm not going to explain candlesticks to you. You can look up how to read a candlestick wherever, you know. But we have this one open, and it kind of juggled in this area for a bit. And since it's right after our previous high, I initiated my short right here. Now, what I was looking for here is I actually stayed in it through this green candle, so I was red on this trade for a little bit. But I was sized so that I could risk close to this. Now, if volume was high, if the tape looked crazy, just a big flash of green down the tape here, I'd probably exit before this purple line up here. But we didn't run into that situation, so we don't have to worry about it, right? That being said, I waited. Now, I saw this range with these few candles, and then this one. Now, when I'm building these ranges, I tend to take the average of where the things are. So, like, a lot of times I'll chop off kind of some of these candles and, like, draw a line, say, like, here. And I'm like, okay, that's kind of the range, and this is, like, its breathing room, the wicks. And then same thing here, like I didn't draw at the very bottom of this wick. Do whatever makes you comfortable. It doesn't really matter as far as if you want to make it at the very bottom of the wicks, like here, or like you can see here, I averaged it out again. But yeah, so I waited it, and right in here, you know, so I'm in the money. I'm in the money pretty good right here. And I wait for a little bit. I see a few dojis. Now this one, I started to think, is this thing going to rip? I almost closed the trade when this candle went green initially. But right as this one went green initially, and they tried to push towards those highs, the tape started flashing red, and I saw the level 2, which is this blue area right behind like my chair here, started weighing more heavily in the sell, in the ask, I should say. So I stayed in it. It broke the 9, and held under the 9, and I ended up covering on this doji right here. So I'll do my standard thing. I didn't draw my... normally I draw a box. What the hell? Why doesn't it let me draw? Okay, well I guess I'm not going to draw, because it's not letting me. But regardless... I exited on this doji here. You can see I exited a bit early, but I still came out well in the green on the trade. Now back to the whole ATR thing. I touched on that, you know, I was hinting at something, and I didn't really get into it on the actual trade mechanics just yet. Now, in an ideal scenario, what I would see is this run approximately a whole ATR. Now, the tape was telling me otherwise, which is why I got into this trade before an ATR had hit. But normally, like, say my thesis or my outlook on the day for a particular name is short. I want it to go ideally up some or a whole ATR, because if it's already up the amount it generally runs in a day, chances are pretty good it's going to sink back down, right? So in that case, if it ran a whole ATR, the point at which it ran that ATR would be my entry to get short, and vice versa if you're going long. If you think something is gonna dip, or it does dip out of the open and it's dipped a whole ATR, so let's say this opened just for the ease at 42.70. As we remember, an ATR in this was 2.03. Let's go ahead and just call it 2. So if this opens at 42.70 right in here, then by the time it hits 41.70, or no, 40.70, it's gone a whole ATR. So that's down quite a bit. And obviously, if it starts to base out before it hits a whole ATR, you might be able to form a few of these ranges and risk off of one of those ranges logically. But that being said, this is pretty much my standard style as far as scalping goes. And in a lot of ways, sometimes it's even faster than a scalp, and I almost feel like it's more of a market maker kind of play, but obviously not, because market makers have a ton of capital. But yeah, so essentially what I do is I'll watch several candles kind of form a range. This is what I'd call, this is a very early entry for me when I entered on this candle here. That was I entered on this candle here. Wait. No, yeah, I did. I entered on this red one right here. Yeah, okay. Normally I like to see 3, maybe even up to 5 candles kind of form a range. And then I'll look to buy or sell. So like if I'm short, I'll short towards the top the next time it gets towards the top of the range. Or if I want to go long, I'll long the next time it gets towards the bottom of the range. And then I know if it breaks that range by much, generally speaking, I size in a manner that allows me to have a little bit of breathing room below the range. Because you don't want to, get stopped out, flatten your position, and then it only breaks your range by a few cents and it rebounds right back. So buy it towards the bottom of the range and sell it towards the top of the range, or vice versa, depending on if you're short or long. And then just do that repeatedly throughout the day. So like you can see kind of a little range forming in here. And, my drawing tool's on the wrong one. But yeah, you do that pretty much all day. You can do it with pretty much any stock. You just go in here. You start to see, maybe you look at this out of the open. What the hell? I'm on the right drawing tool, right? Yeah. Maybe you see this is starting a range, and you want to draw like a little bit of a range there. It goes down towards the bottom. Buy it, go up here, flatten your position and short it, back to the bottom of the range, back and forth all day. And then of course every once in a while it'll break the range, and ideally you're on the right side of it when it breaks the range. But if it doesn't, generally speaking, now once again, to use round numbers, let's say I had such a position size that I made $100 here, maybe another 100 on the way down, and then another 100 on the way up. Well, if I've already made $300 and this breaks the range, I would give it maybe, $30 to $50 red or so outside the range, and then I'd flatten it, and then you're still up $250 or so on the day. So you get out of those positions when it breaks the range. If it's going against you, you just get out of it. Straight up. Don't think about it. Get out of it. Wait for a new range to form, and then go back into it. So, yeah, that's my standard style. And that's what I do pretty much on a daily basis. I mean, a lot of times I'm done by like 10 o'clock. I trade like pre-market into 10 or 11 o'clock. Usually never trading in the afternoon, unless it's like some sort of earnings play or something like that. But that will be pretty much it for this little video here. And I would just want to reiterate, Finviz, this site right here, excellent site. And then over here we have Market Structure Edge, but that's like a paid kind of thing. So, and I found another one recently, last but not least, QuiverQuant. This thing gives some good information. You can just type a ticker in here and it'll give you some info on it. So we'll go Tesla. and it'll give you like if there's insider trading, inside interest, what politicians have bought or sold it recently. It's mentions on Wall Street Bets. I thought they did Twitter mentions too, but maybe not. Corporate lobbying, yeah, all sorts of stuff. So QuiverCont, FinViz, great sources, and that'll be it.